Hello, ladies and gentlemen, and welcome to the show. I'm glad to have you guys here. You know, what's getting ready to happen is unprecedented. I'm going to lay it out for you guys. The market, after Donald Trump got elected, you know, there was this big surge in the market and went up way high. And there was programs put in place, tax programs put in place for corporate tax and so on. And there's corporate buybacks and everything happened to pump the market up. Well, you know, back in 2018 on my channel, if you're familiar with Financial Turmoil Explained, I was saying at the time when they were doing quantitative tightening and they were stop the quantitative easing and they are also raising interest rates, I said that they were going to stop raising interest rates, and I said that they were going to go back to quantitative easing. Well, they went back to sort of quantitative easing, and they did lower interest rates. I didn't see this repo thing coming, you know, which is an added stimulant to the economy, but you have to understand something about the repo market. It is a lending market, overnight lending, and right now the Fed's pumping tremendous money into the repo market. But this money that they're pumping in, you know, even though they roll these loans over, they roll them over, still, that money is a loan. So what they're doing is they're creating, because they're rolling these loans over, they're creating a bubble of loans in the repo market. It's not a good thing because it's a tremendous amount of money that they're pumping in there, and they're creating a bubble there in the repo market because those loans have to actually, there comes a certain time of maturity where those loans have to come back, and then the bubble bursts. So they're creating a bubble there. In the stock market as well, they are, because of all this liquidity that's coming into the repo market, some of this is getting turned over into the stock market. The banks, they buy in treasuries, the big banks, they're low on liquidity. Right now at this stage in the game, they didn't want to support the repo market. They didn't want to lend money out into the repo market, so the Fed took it over. Now the Fed's taking it over. And what we're looking at is a market that was already overextended. The Dow Jones was already overextended, and now this surge of liquidity coming in from the repo market and the Federal Reserve buying T-bills to the tune of $60 billion a month is stimulating the market up to unreasonable heights after it was already overpriced and overbought. Now it's becoming absolutely ridiculous. It just seems to me that what they're creating is the perfect storm, where you've got a market that's pumped up on basically cheap and easy money, and at the same time, the liquidity bubble in the repo market could burst at some point in time, and also the banks are very low on liquidity right now. And so we're looking at a very unusual situation. Oh, it's cold. Ooh. Anyway, we're looking at a very, I didn't warm this car up and I just wanted to do a video for you guys, you know. So anyway, we're looking at a very crazy situation here with the markets oversold going into the new year. Now, I think it has enough momentum to carry us into the new year, but the thing is just like any bubble, it is now gone into a hyper bubble, and all bubbles pop. And we're looking at the same time, we're looking at gold and silver down at very oversold area. They're I would say oversold, but they're, why I say oversold is because the banks and the rich people right now are stocking up. They're stocking up on gold and silver. They know what's coming, you know, and they know that gold and silver is really good. But, you know, cryptocurrency right now, for the last, I would say probably a couple weeks anyway, it's been testing its bottom. It's been feeling it out, trying to find a bottom. This is what markets do, you know, after they finally finishing a bear cycle. I think we're getting long in the tooth toward the end of this bear cycle, and we see Bitcoin is held above $190 billion for the industry. That's all the coins included. It's held above $190 billion. That's a good sign. I don't see it breaking down under support in the last little while, and this was kind of like its window of opportunity to break down through the support levels and go down to a lower price level. This was its big opportunity in the last couple weeks, and it tried. It went down some, but it stayed above 190 billion for the total industry cap, market cap. And so watching that and seeing what's happened, I tend to think that we're running long in the tooth for this bear market. But there is something that concerns me in the future, is this stock market. Like I've explained to you, it's a perfect storm for the stock market to burst and for it to fall. And the thing is a market crash or even a significant downturn in the market, what we would call a really hard correction, might be in the cards early in the part of this next year coming up. Because the Fed, they're front-running this whole thing. They're out there stimulating the market before the market crashed. The market was getting ready to crash. It's going up to dizzying heights. And what did they do? They saw the market crash coming, and they've come underneath the market crash, and propped it up to higher highs than ever, instead of allowing it to crash. It's like they're in this mode now where they won't allow anything to crash. They won't allow the bubbles to pop. And the stock market's now gone into a hyper bubble. So in the end, can they absolutely control this market to the point where it won't suddenly crash? I don't think so. I think markets tend to want to find fair market value, and I think the stock market will. I think they're going to get a sudden onset of this crash. It's going to probably sometime in the new year, it's going to hit really hard and fast. I think it's going to hit so hard and so fast because this is the perfect storm that they're going to have to actually, their stops are going to come in place where they stop the market, and then I think they're going to rush in, the Fed, with some form of stimulus. Probably going to go back to regular quantitative easing. That's probably why they're holding off on the regular quantitative easing, where they buy the long end of the treasuries rather than just the T-bills like they're doing now, where they'll actually buy the whole yield curve. Heck, buy it all the way out to 30 years. What's the heck, and spend all that money. And that's probably what they're waiting. They're probably holding back on lowering interest rates. Holding back. They're holding back a little bit of their ammunition because they know this market crash is coming. What I'm interested in is what is going to be the effect of this market crash when it comes, probably in the first or second quarter of this year coming. It's probably going to hit. What's going to be the effect on cryptocurrency? Which way is cryptocurrency going to go? I'm not sure, Now, I know gold and silver is probably going to catch a bid. Not so sure about cryptocurrency. I think cryptocurrency will catch a bid through the market correction or market crash. I think it's going to be more of a very strong correction that hits suddenly out of nowhere. It's probably going to be news about China. It's probably going to trigger it, or a combination of China and India, because the Indian economy is slowing down something tremendously. And so is the Chinese economy. The damage of this trade war, has already been done. So we're looking at a situation going into the new year here where Bitcoin is holding the line. It's holding its line of support. And I think the next move's probably going to be it start to creep up, especially based on this liquidity that's coming into the marketplace from the Fed's repo operation and their T-bill buying operation that's going on right now, even though they're not lowering interest rates right at this particular point in time. So, I know a lot of people are tapped out, though, because of holidays, They're tapped out. It's hard for them to buy Bitcoin this time of year, Holidays take a lot of your cash flow, And we're already strained. Us, the middle class people in this country, we're already strained, you know, for extra cash, to have extra cash on hand for anything. Because of what they're actually doing, they're making the rich richer and the poor getting poorer, and we're on that side of the fence, you know. Listen, hang in there, guys. If you're holding a little bit of coin in a wallet someplace, make sure you keep it off of the exchange. Make sure you got your wallet backed up with your private keys. You know, off someplace so that you got if your computer goes down or your hard drive freezes up, that you've got it on a piece of paper written down. Some wallets you write down your different words, you know, like 12 words on some wallets and 24 words on other wallets. Put those words away in a very safe place so you can recover your wallet, you know. Make sure you got everything according to Hoyle and HODL, guys, because I'm telling you, cryptocurrency's day is coming. Once they're done with all this nonsense of trying to stimulate the markets, and they keep stimulating, and there's going to be a certain point where everybody just realizes, hey, you know what? The Fed's lost control. They're going to have to stimulate to the end. I'm getting rid of these dollars. That's going to dawn on everybody. Right now, it's dawning on a very small minority. It's going to dawn on everybody, and you want to have your cryptocurrency put away at that particular time, because it's going to be massive to move into gold, silver, and cryptocurrencies. It's going to be very disruptive to the system. Thank you guys for listening. Catch you in the next show. Give me a thumbs up, guys. Bye-bye.